What's up, folks? Back at it again. It's your boy Kenneth, 100 Years of Wealth and StreamHomeLoan.com. I hope you guys are doing well. Let me scoot over here. Thank you for tapping in. Thank you for going ahead and liking and subscribing right now. Just want to drop some knowledge on you, some information that hopefully will guide you and help you in your pursuit of success within this industry, your industry, but just moving forward. Hopefully it assists in some way, shape, or form. So like and subscribe, but let's get into it. So I wanted to make this video because I've been reading a lot of information and trying to digest a lot of information regarding what's going on with the interest rates, what's going on with the market, trying to make some sort of, not really predictions, but gain some sort of expectation of what we think is going to happen in the future regarding our industry. The mortgage industry is what I'm referring to. And what I've seen is very interesting. So if you compare this year, let's say the month of September, we're still in October, but if you compare where we were at in the month of September of 2022 compared to the month of September 2021, mortgage applications were down by about 27-28%. And it changed depending on what week you were at in September. But that's a pretty big decline in mortgage applications from the previous year. But what that should tell you is that there's still a large portion of there's still a large amount of activity going on. So even though things have changed drastically, and removing 30% of the market is crazy, right? Like, that's billions upon billions of dollars of loans that aren't going through, probably even trillions, but it's a huge amount of transactions that aren't happening, and that affects a large amount, or a lot of different industries. It affects notaries, it affects title companies, escrow companies, obviously mortgage lenders, mortgage brokers, loan officers, etc., appraisers. So it's a trickle effect that affects all the people that are tied to that industry: construction companies, new home builders, home appliance sellers. It really starts to go from the home side of the industry to the retail side of the business, because people that buy homes or people that refinance go and take money and put it back in the economy in different ways. So, but with the fact that I'm seeing that 30%, let's say a little bit less than 30% of the transactions or applications are gone from where they were last year, that tells me that 66 or 67%, 70% of the applications that were going on are still there. Now, does that mean that that those 70% aren't leading to less transactions because maybe the numbers aren't favorable compared to last year? I would assume that's the case, but you should still try to look at things on the brighter side of that scenario if you do plan on staying in the industry, because that's all you can do sometimes, is look at the brighter side and figure out how you can win within that segment. So for me, I'm looking at it like, for me and my agents, I'm like, hey, look, if there's still 70% of the volume that was going on last year, you need to figure out how to get in front of those people that are still active. Do you need to increase your outbound calling? Do you need to increase your lead intake, which is definitely challenging in a market where there's less transactions going on, so people are making less money, and you're expected to probably spend a little more money to create the same amount of business, right? So by no means do I take that for granted and act as if it's just easy, go spend a bunch of money on leads. It's really not for most people, unless you've been sitting on a lot of capital. And even if you are sitting on a lot of capital, you're wondering if right now is a good time to disperse that capital, because the numbers in the market just aren't favorable. So you really have to think about what you're going after, and how you're going to go after it, and you should still be able to create business. So for instance, if you're working within the purchase market, obviously, a strategy is to create relationships with realtors. How do you do that? Do you dump a bunch of money into Facebook, or do you go door to door of real estate offices and actually try to make a one-on-one connection? I personally, coming from like a small business perspective, I'm thinking that your energy is better spent by putting yourself in front of people so that you can have that one-on-one contact, as opposed to being part of hundreds of thousands of people and businesses, if not more, that are dumping money into Facebook, fighting for that the client's interest. But, you know, someone could probably hit me with some information that makes me adjust my thinking on that. But I just think that depending on how much money you have to spend on marketing, that's the main thing that you have to really consider. If you have a lot of money to spend on those types of sources, then you can definitely take the time and dole money out consistently to where you know, you should start to see results from that channel. But if you are more of an individual, independent, then you might want to use your sweat equity prior to spending money or spending too much money, because you just don't want to put yourself in a position where you're just dumping out a bunch of money and it's kind of experimental, unless you've already seen results with a certain source, or unless you have like a good amount of time to really consistently work that source. Going out to real estate offices, you know, meeting people on a one-on-one basis, I think makes you stand out immediately, because you are actually not just an online advertisement, you become an actual individual, and then you can go from there, create some credibility, and try to further the relationship and work with some of their clients. But you know, it's just a time in the industry where I think that you really have to sink your teeth in, sink your feet in, and just grind hard. And when I say grind, I just mean like increasing your outreach and figuring out ways to be creative, because the reality of it is that if you don't, then you're either gonna fall out of the industry, maybe maintaining your licenses while you work a full-time job, which is fine as well, or you might just fall all the way completely out of the industry and not really see this as something that could be a beneficial, you know, license to maintain, you know. But I totally get both sides of it. I think personally that if you do want to survive in this industry, it's doable, even while the interest rates are crazy high. As you can see, there's still a large volume of clients out there looking for these services, and there will be. And you want to really fight for that business, create the relationships, pull the business in that you can, and in the meantime, keep your expenses low and try to ride the wave. No one knows exactly what's going to happen in the market. A lot of people are speculating that rates will come down at some point. I think you really can't depend on that, because we just don't know when that's going to happen. So it's better to kind of create a business model and a business plan around the current industry, and how you will succeed within this industry. And I think that will only make it to where you're better positioned to take advantage of any sort of decrease in interest rates that happens in the future. So like and subscribe. I hope that gave you a little information. You know, push is the only method to succeed in this industry right now. You know, it is a grind. But, you know, during the good times, you're making a lot of money, and it's a little bit easier to pull in those transactions. And during these times, things change. You have to stay dedicated and stay focused, and create your good times. Create your little sphere of, you know, transactions. You can things can be slow in the industry while you're creating a lot of activity to create that business for yourself, but you got to stay busy, and you have to keep putting yourself out there, contacting every person that you know, contacting every person you ever did a transaction for, contacting every realtor you've ever worked with, you know, trying to maximize your spend on leads and not overly, you know, putting yourself out there, trying to pace it. You know what I mean? Like, you'd rather, instead of dumping everything into one source and taking the gamble that could take you out of the game, you'd rather pace it out and try to really use your sweat equity, you know, your ability to outreach and communicate with people without spending, which would be, you know, just you putting in or you know, making your efforts to connect with people, whether it's walking into an office, maybe creating some flyers before you go into a real estate office that touches on the strong points of what you might be able to do for an agent or for their clients. So, you know, even myself as the broker owner of the company, I'm thinking of different ways to be extremely cost effective while increasing our outreach, you know, and that's a challenge in our day, and in these times in the industry. But strong will survive, the industry will continue to thrive, deals will keep going on. You got to figure out how to get yours, and I think the main thing is just put yourself out there, be consistent, know what products are available, and try to offer value. And the more you do that, the more you'll run into transactions. So once again, 100 Years of Wealth, like and subscribe. I appreciate you. I hope your day is going well. Thank you.